Hello guys, welcome once again to Traders Delight. How have you been and how's been your trading sessions? Hope you have been getting amazing results from all your trading. Sorry I've not dropped a video in a while, and that's because I have been trying to put together some courses that will really benefit you and will really help to take you from your present knowledge of trading to a better and higher form of trading. Today I'm bringing to you a new strategy which I call the DICON strategy. The DICON strategy. Before I proceed, if you are new to this channel, kindly subscribe to this channel now. And if you're watching, please go to the comment section and type "I am watching," so that I can know that you are watching this, and then I'm communicating effectively with you. All right, so let's go to the strategy now. We are using very few indicators today, and as I told you, the best success so far in trading, I mean the profitable traders out there, ride on two basic understanding. The first understanding is understanding of price action, and the second understanding is understanding of indicators. You can't rule out price action, you can't rule out indicators. Having a very sound understanding of the two will help you to become a very profitable trader. So today I'm going to show you what the DICON strategy is and how you can use the DICON strategy effectively to trade boom and crash and even other commodities. All right, the DICON strategy, it's a name I developed together, which is from the divergence and convergence strategy. So today, I'm going to be showing you how to go about it. Now, there are two types of divergence that are in trading, or convergence as you see it, because based on the shape and the movement of the chart, it can either be a divergence or a convergence, but generally acceptable most times when you are looking at an uptrend. So when there is something called a regular divergence, actually is a convergence. And what that means is when we have a lower low and on the chart, and then we have a higher low on the indicator. I know I'm going to demonstrate this very soon. When you have a lower low on the chart and a higher low on the indicator, you are said to have a regular divergence, which is actually a convergence. And then what we call the hidden divergence is when you have a higher low on the chart, something like this. You can see an hidden divergence here, an hidden bullish divergence. This is a bullish divergence. You can see a higher low here. From here, this is a low, this is a higher low, and look at the indicator. This is a low, this is a lower low, this is a low, this is a lower low. So this is a formation of what is called a hidden bullish divergence. This is a hidden bullish divergence. So how do we go about this? If we have this lower than this, and then we have this higher than this, so that means we have a lower low and a higher low here, then that is a regular divergence. Now how do we go about this, and how do we trade this? I'm going to show this example stage by stage. This is a hidden bullish divergence. So how do you trade this? If you see this, I'm going to do other part video where I'm going to show you the different types of divergences, so you can know how to trade them and how to trade them effectively. So how do you trade this is hidden bullish divergence. So what do we do now? Just follow me. The first thing you want to do to be very sure is you want to connect connect the lows on the chart. Connect the lows on the chart. So this shows you that, of course, this is truly a low and a higher low. A low and a higher low. Very good. Now, what you want to do is to connect the lows on the indicators. You have to do this because you have to be very sure. Because if you look at it, there are a lot of highs and lows on the chart. You don't want to make mistake. Try to draw it for every one you see. Now, you can see I'm drawing it on this. Why are we using all these two indicators? Is because of confirmation. You are using this as a strong confirmation of what you are seeing, because the interaction of this indicator with the chart might be different from the interaction of this indicator and this chart. But when the two indicators are confirming the same thing for you, it's a strong sign that you are good to go into the market. Like I told you, it's the DICON strategy, and this is how to trade hidden bullish divergence using the DICON strategy. So what do you do from here? Now, when you have confirmed this and you have confirmed this, you've confirmed this, is showing to you that this is a setup for a hidden bullish divergence. Why is it hidden bullish divergence? Because hidden in the sense that it is a divergence that speaks about the continuation of this bullish trend, this uptrend. There's an uptrend going on, an uptrend is going on. So when this forms, it's showing to us that this is an uptrend going on, and this low was formed so that the price can gain momentum from oversold and shoot up again. Listen to me. This low was formed so that because the price was losing momentum, it came here and gained momentum to shoot up again. So once you see this and you see this setup and you can confirm this with the indicator settings, if you like, you can wait for a spike to confirm. However, with these settings, you can take your buy here. Take your buy. Now listen, because it is a bullish, hidden bullish divergence, your TP most of the time is going to close because it's going to form a higher high here most of the time. So you either take a TP somewhere here. So once you take a TP from here, you can see you'll have hit take profit and you're taking your target and you're out of the market. This is very, very, very effective. It works powerfully. If you use it, you're going to get amazing results from this. So you can see that this is boom 1000, and because of this is what instructed you to take spikes. Most people want to just catch spike for catching. Make sure that you are catching spike because the analysis of the market is telling you the spikes are coming. So this has informed you to take spikes. So once you take this, you would catch all these spikes till you take profit and you're out of the market beautifully. So this is the DICON strategy, and I've just explained one of it, which is the hidden bullish divergence. I'm going to look for scenarios where I find the regular bullish divergence, and then the regular bearish divergence, and the regular the hidden bearish divergence. All right, guys. So look at this now. Once you see a trend, first of all, what you do, you look for the trend. What is the trend? Is it an uptrend? If it's an uptrend, beautiful. And then you check the low. What is the next low? And you use this 200 EMA. I'm going to show you the setting very soon. The 200 EMA is going to help you to be very sure, because if you are taking something like this, you could have seen that even here, even the indicator did not recognize this low, did not recognize. You can see there was nothing here showing that the indicator did not recognize this low. So if you take this and you take this, even this indicator here could have helped you to know which one to pick from here to here, so you know that this is the next accepted low for the divergence format. So once you have this setup, check your indicator. What's your indicator saying? You can see here, this is a low, this is a lower low, this is a low, this is a lower low. Draw your chart to be sure, and then take your buy. Take your profit to be the high here in between, or almost before, almost there, or just give some pips away from it, so that should in case there's a support there, you don't get a reversal immediately. So just take something, just leave out some few pips and take profit, and you can see that it got there, and then you exit in profit. All right, guys, let me show you the settings for this, and then I'll see you in the next video. So the settings for this is this, very simple. I used all these because I just wanted to be able to spot the fractals. Help me to spot which one is the where the price action has decided to make a reverse after taking 5 candles. So you can add these the fractals, any color of your choice, any style of your choice, and then you had the moving average period 200 shift 0 exponential mental exponential apply to close style 4 pixel. I use color green, you can use any color of your choice, and then your relative strength index. Look at what I did. Relative strength index period 8 apply to close style 3 pixel, any color of your choice, and I used all this. I used all them. I'm still going to explain something deeper about the relative strength index in my upcoming video. Just watch out. So 75, 25, 60, 40. You can do that, and then watch out. And then I added the awesome oscillator 4 pixel, and then I'm done. Leave this out. This is for something else. Leave this out. Leave this out. Leave it out. Don't worry about this. All right, guys, with this you are good to go. Once you spot a low, and then you have another low, I've told you can use the awesome oscillator to confirm. You can see here show the low, and then next low was a lower low here. You can see here is blank, showing that all these spikes here were not recognized by the indicator. So that will help you to be able to know the settings properly. All right, guys, let me know what you think about this video. If you are watching, smash the like button, comment in the comment section, and let me know if you have any question. All right, guys.